So this is my portfolio. The reason I'm doing it, this is also not investment advice. So this is not investment advice at all. This is just me talking about like my thoughts and stuff publicly. I am not an investment professional. If you want investment advice, go seek a certified investment professional from an accredited institution or whatever. This is not investment advice. So this is me talking about my portfolio, and I have five different stocks. Every single one of these stocks is in China. I do not own any stocks outside of China, and that can either be a really, really good or a really, really bad thing. The reason I own these companies is because they sell very, very cheaply relative to American companies. For example, you have Momo selling at, I believe, around it's like 9 times earnings, I think, something like that. So you're getting not you. I'm just saying theoretically. This is all theorizing, but this is what I'm doing. And that's why I talk about it because all these YouTube channels have, oh, I'm a YouTuber. This is my portfolio, and it's literally like 100 stocks. That's not a portfolio. That's called closet indexing. It's where you are an index fund, but you're acting like you're not, and all you do is talk because you want people to watch your videos so you can milk them and make money off them and not be interesting. I mean, that's not interesting. I mean, owning the S&P 500 index and making a video every week talking about one member of the S&P 500 index and wasting everyone's time for half an hour and trying to charge them Patreon fees is disgusting and it's outrageous. So I will talk about my portfolio because this is really what investing is. I mean, I've analyzed every one of these companies to the best of my abilities, and I'm not saying I'm not an investment professional, but I have 44% of my stocks, my portfolio in one stock, which is Momo. It trades at 9 times earnings, I believe. So it's something like an 11% return. This company trades at 9 times earnings or so. That's an 11% return right off the bat. So all these other people buy companies that trade at 50 times earnings. That's a 2% return. I'm making 550% more than that. Yeah, is there more risk? Yes. Um, but also the return is better. I mean, right now I bought it at $7.92, and the dividend is like 70 something cents. So I make right now, I think I calculated it, it was like an 8.9% yield. So off of Momo, I get an 8.9% dividend. And did the dividend go up like 15 or 20% from last year? Yeah, it did. But I still make like 8.9%. I don't know very many companies where in 2 years you make 9% basically off the dividend. If anyone knows companies where you get 9% in 2 years, I'd really love to know that. Because right now, if you buy Apple, you're not going to get 9%. And is there more risk? Yes, but the payoff can also be great too. And this is synchronized. Momo is especially synchronized with the Chinese economy. So if you have growth in China, like I said, it synchronizes the Chinese economy. So therefore, if China does well, this is going to do well. Now, in the other video, I talked about how I own this one company, Momo, and about how right now, they think they forecasted like 15% decline in revenue for this year. Now, if China does well, they're going to do well. It doesn't look like China's going to start doing well, so, but they easily cover their dividend. I think they could literally double it to like a huge percentage. I mean, they have $2 billion in cash or something. Like their entire market cap, I think, is covered exactly perfectly in cash. I don't know many companies that have a market cap in cash. Now it depends on whether or not that cash is offshore or whatever, and PRC law and stuff. Anyways, it's a live streaming company and stuff, and also a dating app. Second off, you have second largest position. You have YY, or now it's been called Joy, I guess. Like on this brokerage, they haven't like updated that to Joy. But right now in Momo is actually Hello Group, I think. So Joy, you have Joy or YY, whatever you want to call it. This company right now pays a 7% dividend. So again, I don't know very many companies who pay a 7% dividend. Um, I'm down on this company. Um, I think I'm down like 15 or 20%. I think I bought it for like $34.80 a share or something for, on average. So I'm down substantially, but right now it still pays 7% if someone bought it. Um, and the other day, a day or two ago, it was paying 8.3% because it crashed so much. I mean, is there a lot of questions about the business model? I mean, I guess so, but this is a company. People say, oh, this company's a fraud. Well, it's really hard to pay out over $1 billion if you're a fraud. Most frauds, I don't know if these people don't have experience or whatever, but most frauds generally don't pay out huge amounts. Could it be a fraud? Sure. It could be a fraud. I mean, I'm not the CEO. I don't have access to all the perfect information. But, it's a live stream company, and unfortunately, Southeast Asia and China is going through a growth decline right now, I guess. Deceleration. Material deceleration. So right now, a couple of years ago, they're growing 70% a year over year. And then they're banned in India and stuff. But now they're doing, well, Bigo, which is I think it's their profitable, well, it's really the only thing they have right now I believe it's profitable. It's like grown like 15% last quarter or something. So, they're just, every single one of these companies, they're Chinese. So they're all involved in China. And if China's doing well, they're not going to do well. If China's doing well, they're going to do well. But, they're still paying dividends and they're still repurchasing shares. And, um, you know, unfortunately, China's not doing well right now. But that's reality. Finvolution is a fintech company. It's based in China, but has a substantial presence in Southeast Asia that's expanding. I think they're year over year. I mean, the international market now contributes, I think, 10% of their total revenues. So, if something contributes 10%, it's now substantial. Um, it's also growing fast as well. You have 360 Finance. That's another fintech company. And that's 7% of my portfolio. Finvolution's 19%, 19.7. So, these are just fintech companies. Both are, I think especially Finvolution's growing internationally. 360 Finance it's generally like domestic. And then you have douyu, which is a live streaming company that's in China. So, whereas like YY sold their live streaming company to Baidu, and so like the regulators are really like no one even knows what's going on, if it's approved, if it's not approved. But for accounting purposes, they've subjected it to, like, they've discontinued it since 2021, so for over 2 years. Douyu is purely in China, whereas YY has Bigo, which is international, specifically Southeast Asia, I think Vietnam. It used to be big in India, but obviously got banned by the Indian government, which massively destroyed their revenue and that overall for the group. But douyu is just sitting there like, I mean, douyu is like, oh, plus 2% revenue, minus 2%. But they're slowly increasing their profitability and they're decreasing their ad spending, I think. So they're, when you have a static economy, which is what's happening right now, then they decrease like their ad spending because they're trying to massively increase profitability because of the tension domestically, blah blah blah, with video game approvals and stuff. Um, anyway, so this is my whole portfolio, because I think a lot of people say, "Hey, I'm an investor." You're not an investor if you own more than 50 stocks. That's basically an index fund. I mean, how are you going to outperform the market if you have 50 stocks? I mean, it's possible, it's just really hard. And the way that they're doing it, they're not serious. That's just a way that they can make money on YouTube. So I wanted to say, hey, this is my portfolio. This is what I'm doing. This is how I'm doing it. This is why I'm doing it. This is what I think. And I just believe in transparency because I think there's so many trash YouTubers who aren't honest about what they're doing. So this is what I do. I have 44% of my money in Momo, 23.5% in YY, 20% Finvolution, 7% Um, 360 finance and douyu is 5.3%. So that's what I'm doing, and I'm doing it because I think I get better value in China right now. I mean, is there a lot of tension? Yeah. Is there not stability with the government? It doesn't seem to be. I mean, they destroyed that whole. I mean, the regulations are changing all the time, and it's not very hospitable right now. So, but at the same time, you're also getting a 9% yield from momo. That momo, it's risky. I mean, it's very risky. So we'll see what happens. But this is just what I'm doing.